It's mid-July 2021 today. I'm going to talk about 3 things you need to know to understand the real estate market. Welcome back. I don't have a job. I have a passion for real estate. I have a passion for helping people start a new chapter of their lives and become successful real estate investors. If you don't want to miss out on useful real estate information, then please hit the subscribe button down below. Let's begin. First point of mine today is affordability is worst since 1990. As a real estate and mortgage expert, here is one of my favorite websites, www.rbc.com/economics. You can find not only economic news, real estate news, but also information regarding stocks and other useful, important information and news that we need to know, along with the graphs that are easy to understand. It's a really good site as it shows trends up to now and future estimates in graph. If you are interested in this kind of topics, I highly recommend to subscribe to the newsletter. Among the articles posted last month, this graph shows housing affordability by detached home and condominium from 1986 to the present. The yellow line shows the affordability of detached house and the blue line shows the affordability of the condo. As you can see, the affordability of the detached is worst since 1990. It shows that it has become really difficult to buy a detached house. Affordability of condo, on the other hand, are not so bad in 2021 compared to 1990. Based on the income of the average household, condos are still affordable. We will talk more about condos in a little bit. Introducing one more RBC graph. Yellow bars indicate future forecast. RBC predicts that there will be more home sales in 2021 this year than in 2020. And this trend is expected to subside in 2022. As of July 23rd, about 70% of Canadians had at least the first COVID shot and about 53% had both shots. And the economy is recovering with the expectation that the daily life will return to normal. Those expectations will also affect the real estate market. And given the current real estate market situation, where supply is fundamentally not meeting demand, I agree with the RBC's outlook. My second point, the condo apartment market has made a complete comeback. Let's take a quick look at the real estate market updates that I analyze, graph, and share on my website each month. With the intention of looking at the big picture before looking at the details, it shows the overall market trends of GTA and that of Durham area, and then market trends of two cities, Oshawa and North York. Each graph shows the June data over the past 5 years. One thing to keep in mind here is that Oshawa is mostly consists of detached, semi or townhomes, whereas North York is a market with many condos. As the COVID lockdown began in March last year, people avoided small condo apartments and looked for more spacious options where they can work and play at home. They flocked to the area with many detached homes like Oshawa and Whitby. Durham area has seen the average house price going up more than 30% compared to 1 year before. The June 2020 was when the market was just starting to recover. You can see that the number of sales of GTA, Durham, and Oshawa were all going up. Yet, North York's sales volume plummeted in 2020. It was because most people didn't like the idea of buying a condo at that time. But what about June this year? North York's trading volume has fully recovered. Sales volume is higher than usual. I think this happens for two main reasons. First has to do with my first point today. Affordability of detached house is too bad. People who want to buy a detached house but cannot get enough mortgage have turned their eyes and started looking for condo apartments in the city center again because they cannot afford the detached homes. And the other reason is that, as I said, living in the city center seems not as bad as it used to in 2020 as our lives are starting to go back to pre-COVID. For those who are planning to buy a condo, I think it would be better to hurry up before it's too late. Third, I'd like to introduce one more institution that hope to become a comeback case, CMHC. CMHC, Canada Mortgage and Housing Corporation, is a crown corporation responsible for mortgage insurance. When you buy a home, if you cannot make a down payment of 20% or more, you need to purchase mortgage insurance. The three big companies that sell mortgage insurance in Canada are CMHC and Sagan, formerly known as Genworth Financial, and Canada Guarantee. Until the beginning of last year, CMHC was the undisputed leader in this market with a market share of over 50%. However, as of the first quarter of this year, CMHC's market shares are down to 23%, giving up the first place to Sagan and is now in third place. What had happened? When each lender calculates how much a person can get a mortgage, they use something called the GDS-TDS calculation. However, when the pandemic hit last year, CMHC conservatively lowered the GDS-TDS ratio from 39.44 to 35.42. It means that you will get a lower amount of mortgage when all other conditions are being equal. When CMHC was the undisputed number one, if CMHC changes its policy, other companies follow suit. However, when CMHC announced the new GDS-TDS policy last year, Sagan and Canada Guarantee said, no, you're not going to follow this time, as your new GDS-TDS of 35 and 42 seems too conservative. Naturally, those who needed mortgage insurance flocked to Sagan and Canada Guarantee, and that have more favorable terms than the demanding requirements of CMHC. That's why the market share has seen this big change in just 1 year. However, as of July 5th of this month, CMHC also returned to GDS-TDS of 39.44% and the original ratios. I think they have come to their senses after losing all the market shares and dropped to the third place. CMHC is trying to recapture the market. We will see if CMHC is going to be a successful comeback case. That's it for today, and if you have any question regarding real estate or mortgage, and please feel free to contact me. Thank you.